In this presentation, we will take a look at the generation of reports within QuickBooks Online. Here we are in the dashboard of the QuickBooks test drive file you can find by searching in the browser QuickBooks Online test drive, Craig's Design, and Landscaping Services. Now we want to consider different types of reports. Once we have the data in the system, then you can go in and you can generate the reports for it. And that's what's great about QuickBooks. It can take the data that has been put into the system and generate all kinds of different reports with that data. Now, when you first purchase, if you were going to purchase QuickBooks and start a new company file, then you can't really look at the reports yet because there's no data in there in order to generate the reports. That's why this test drive file is a really useful tool for us to go in there and take a look at the reports that would then be generated. So the reports are going to be down here on the left-hand side, down below in the reports section. Now, the reports that we're going to be using all the time, and I wouldn't even call them reports, they're really, the financial statements. I'm going to make this a little bit larger, holding down Control, scrolling up so that we can see it a little bit better. We're at 110, we're at 125, we're at 150. Let's go back down a little bit. We're at 125. So those are going to be the balance sheet and the income statement. The reports that you open all the time are typically going to be up top in the favorites section. So remember, the balance sheet and the income statement are really the financial statement. Those are going to be the major reports. So those are going to be the ones you're going to use all the time. All other reports are going to be things that are going to be a component giving more detail about some section of the major reports, those being the balance sheet and the income statement. Let's go ahead and open these up again. We've seen these in the past. I'm going to open up the balance sheet, and then I'm going to change the dates up top for 2019. So I'm going to say it's going to be from 01/01/19 to 12/31/19. And then I'm going to go ahead and run that report. So let's run the report. And so there's going to be our balance sheet. And then I'm going to duplicate the screen. I'm going to right click up top. I'm going to duplicate that item. And then I'm going to go back to the screen on the left. I'm going to open up our profit and loss report again. So we're going to go back down to the reports. We're going to open up the profit and loss report, our other favorite report. So we'll open that up. And then I'm going to change the dates to the same date range up top. So up top, I'm going to change the date range from 01/01/19 to 12/31/19. And then I'm going to scroll to the right. I'm going to go ahead and run that report. Then I'm going to duplicate that report as well. I'm going to right click on the tab up top as we have seen in prior presentations, duplicate that report. Now, I typically like the balance sheet to be on the left, so I'm going to pull that profit and loss to the right of the balance sheet. So I'm going to left click on the tab, drag it to the right. I'm just going to drag it to the right. There we have our balance sheet and our profit and loss. Then I'm going to go back to the first tab, going to go back down to the reports. And again, as we scroll through the reports, we'll just kind of glance over the reports. And I just want you to think about them in this format. Think about balance sheet, income statement, primary report, every other report, some subsection giving some more data on the financial statements, the balance sheet, the income statement, or profit and loss report. So we have the business overview section. Now we're breaking these out by section, business overview section. It's in order by alphabetical order, but just note that the major reports here are going to be the balance sheet detailed report, and then you have the balance sheet summary. So the balance sheet summary is going to give you basically less information on the balance sheet. It'll basically break that information into, well, it won't break it out. It'll condense it together into larger chunks rather than smaller chunks. The balance sheet. And then we have the business snapshot. That's going to give us some more of the kind of graphic type of information that in a more of a pictorial way rather than basically just reports. We got the profit and loss information. And then if we scroll down, we got the previous year income comparison. Who owes me money, who I owe money to. So we got that basically a snapshot of some key components within there. I'm going to go back to and notice again, all of this is breaking down from basically the financial statements, right? Here's going to be the profit and loss, which is obviously the profit and loss financial statement. We scroll back down, previous year comparison, and then we have who owes me money. That's basically the accounts receivable account, who owes me money. Who I owe money to, that's basically the accounts payable account, both of those balance sheet accounts. So all the reports you can think of, how do they fit into the puzzle? How do they fit into basically giving me more detail about the balance sheet or the profit and loss report? Let's go back down to the reports down below. and scroll back down. We're still in the business overview. We just took a look at the snapshot. Then we have the profit and loss as percentage of total, which is of course a variant on the profit and loss comparison, profit and loss detail, which is going to give us, break it out into more detail, but again, giving more detail on the profit and loss by customer. So now we can break out the profit and loss by customer, by month, and then the profit and loss report. Obviously, these being basically components of, again, the major financial statements. Then we have the cash flow report. We'll talk a little bit more about the cash flow report later. That's going to be the other actual financial statement report. So that's going to be another one kind of foundational type of report, balance sheet, income statement, or profit and loss, and the statement of cash flow. Now, who owes you? So when we see this category, who owes you money, all these items are going to be part of, if I go back to the balance sheet, they're going to be components of the accounts receivable, because the accounts receivable represents money owed to the company. So if I go back to the data, then you're thinking, all right, who owes you? You might as well have called that accounts receivable type reports generally. So then we have the accounts receivable aging detail report. If I was basically to go into this, it's gonna break down the accounts receivable information. If I go back up top and I change this to 12/31/19, and then I go ahead and run that report. I'm going to go to the right so I can, and then I scroll down, and I'm gonna minimize this a little bit. I'm gonna make it a little. So that's the 5281. And if I go to the balance sheet, then just note on the balance sheet, if I run the same date range, 5281 and the receivables. So it's giving us more detail about the receivables, more detail than the transaction report. It's giving us the detail by how old the invoices are that are outstanding. Notice everything in there are invoices basically that are still outstanding. They haven't been paid yet. So let's go back to our reports and continue just reviewing a few of these. Scrolling back down, we are then in who owes us. We got the accounts receivable aging report. Again, AR collection reports. That obviously we're talking about collections on the receivables, right? So we're kind of breaking down the receivables. Customer balance detail. Again, we're talking about basically who owes us money, and now we're going to be breaking it out basically by customer. So which customers owe us the most money. Then we have that's the detailed report, which will give us invoices and whatnot, who owes us money. And then this one will give us the summary. Just give me the bottom line. How much does each person owe us? Invoice lists. Obviously, the invoices are part of the thing that increases the accounts receivable. So that's one of the forms that are going to increase accounts receivable. So it's giving us more detail there. Invoices and received payments. Those are the two things that affect accounts receivable. An invoice increasing it, the payments decreasing it. Open invoices. Those are the invoices that have not yet been paid yet. So those would a list of the invoices not paid. Statement list, terms list. Uninvoiced charges, and uninvoiced time, all things that basically deal with the receivable cycle. So then we have the sales and customers. So now we're thinking about sales and customers. Now sales and customers, again, your customers, you're thinking receivables again on the balance sheet side, and on the income statement side, you're thinking about sales, which is revenue or income. So now you're thinking, all right, profit and loss report. These reports are probably going to be supporting the income line on the profit and loss report. So if we go down some of these reports, and just note that all of these reports are variants. If you think about normal financial accounting, obviously if we're making something in Excel or by hand, we're limited to some degree. But if you're in QuickBooks, you can have a bunch more variants that are just automatically generated by just resorting the numbers and variants of the same kind of information. So now we have the customer contact list. That's basically dealing with customers who just information in terms of their address and whatnot. Deposit details. So now we have the detail on the deposits. Estimates and progress invoicing. So if we had like a job cost system and we had progress invoicing, like as we go type a longer project. Estimates by customers. So if we're dealing with estimates, often with job costing again. Income by customer summary. So let's take a look at that one. We have an income by customer. What does that report look like? If we go back up top, change the dates from 01/01/19 to 12/31/19 and run that report. Let's take a look at it. Now we've got our income. It's broken out by the customers, right? So breaking out by who gave us the money. So that's a useful tool. If we get to the bottom line, then we have the amounts of $10,280,963. If I go to the profit and loss report and I go to the income. So we go to the total income. We've got the 10,200. So the 10,200 here, and we had the 10,280. So there's some kind of variant that's going on between the total income here on the profit and loss, 10,200, and the bottom line report on this report. We'll get into some kind of things that could cause that variant, but note this is basically breaking out the income by who gave us the money instead of by account, basically the account type on the general ledger. Let's go back to the reports on the left-hand side and scroll back down, see what else we had here. We were down here in who owes you. We had the sales. We're down here in the sales. So we had the income by customer, inventory valuation details. So that gets into if we sell inventory, what is the value of the inventory? Then we have the summary, payment method list. We have the physical inventory worksheet, again, tracking the inventory, product service lists. Those are the product and services that we're going to have to set up in order to help us to basically create invoices and track the inventory. Sales by customer detail. So we could break out the sales once again, this time, breaking it out by the customer detail information. Sales by customer summary. Then we can have a summary of it, a shortened version of it. Sales by customer type. So the type of customer. Sales by product service detail. So here's one where we're going to break out the sales. We're going to take that sales number again, thinking of the profit and loss report, and we're going to break it out by what we sold, not who we sold it to, but what we sold, basically the items, service items and inventory items. Again, at the bottom line of this, you would think that the bottom line is coming to the, let's go back up top, change the dates. We'll start it up top at 01/01/19 to, let's do it again, from 01/01/19 to 12/31/9. We'll run that report. And then now let's scroll on down to the bottom of this report and see what the bottom line number is down here. I'm going to go to the right. So we're at the 10,280. And again, if we go to the profit and loss report, you would think that that would be supporting the income of the 10,000. Again, we're that $80 off. There's some kind of variant there. But that's basically breaking out this income line by what we sold rather than who we sold it to. Let's go back to the reports. I'm going to scroll back down here. We got the sales by customer. We've got the what you owe. So what you owe to. So you would think this would deal with accounts payable, right? That's the report. So if I go back to the balance sheet, the payable, the liability account down here is what we owe to, who we owe to. So you would think these reports then would be reflecting that. Now we have the 1099 reports. Those are going to be the amounts that we basically pay. We paid someone. We got to report that to the IRS. We got the accounts payable aging detail, which is very similar to the accounts receivable aging detail. Now breaking out the balance that we owe money to for the payable side. Accounts payable aging summary. We got the bill payment list. We got the bills and applied payments. Obviously, the bills are going to be one of the major forms that we would be using in the accounts payable because that's what generates who we owe to. We have the unpaid bills. That's a list of the bills that are still there, which obviously supports the payable account because they haven't yet been paid. We got the vendor balance detail and the vendor balance summary. Next, we have the expenses and vendors. So when we think about the expenses, then we're thinking about basically the income side, the income statement, profit and loss, which has the income. And then we're also possibly thinking about the payable cycle, which still could include the accounts payable. We got the 1099 transaction detail. We got the check detail because the checks are obviously tied to the expenses oftentimes. We got the expenses by vendor summary. So we can break out the expenses. These expenses down below, those would be the, most of the accounts on the profit and loss are expense accounts. And we can break them out not by account there, but by the detail of the vendor, who we paid them to, rather than by the account that we applied them to. Then we have the open purchase order list. So those are orders that we purchased that we haven't yet received, typically for inventory that we've ordered, not received. Open purchase order detail, purchases and product service detail. So those are the purchases and products. So we're talking about possibly the inventory that we're going to then sell. Purchase and vendor detail. So these are purchases from vendors. And again, vendors are who we buy from. Transaction list by vendor and vendor contact list. Then we have the sales tax information, sales tax liability. Now the sales tax is something we're going to collect when we make a sale. When we're required to do so, we're going to track that on the balance sheet with sales tax payable. So these reports you would think would be tracking the calculation of sales tax and the payable that we have on the balance sheet. So we got the sales tax liability report, which is going to give supporting information to the report, to the liability account on the balance sheet. We got the taxable sales detail, taxable sales summary. Then we have the employees. The employees section reports you would think would be supporting all the payroll accounts, right? So there's going to be payroll expense on the income statement, profit and loss. There's going to be payroll taxes, which is the employer part of the payroll taxes, possibly if they break that out separately. And then on the balance sheet, you're going to have payroll tax liabilities that you would think would be reported with the employee information. So we had the employee contact list, recent edit time activities by employee detail. And then for my accountant, we have some other lists that they group as more kind of accountant-y type things. These are often things that have debit and credit type of things in it. And QuickBooks often kind of pulls out of the debit credit type of things because they want it to be user-friendly in terms of not needing the accounting knowledge of debit and credit possibly. But they still, of course, use debits and credits. And if you have an awareness of debits and credits, then it makes it a lot easier to navigate any accounting software. But they put these reports down there, and these are typically things that are going to have debits and credits within them. So we have the account list. We've got the balance sheet comparison. We have the balance sheet. Some of these are duplicates. Obviously, we would have the balance sheet up top. We have the general ledger. Now, the general ledger is basically going to be a detailed report of the transaction detail. And this is similar to the reports that we go into whenever we drill into an account and say, I want it, like I'm on the balance sheet and I'm going to go up to cash and say, I want to see the detail. And I go into that detail and it gives me what they call a transaction report. This is basically kind of the GL, the general ledger, the detail for cash, the cash account. So if you go to the general ledger, it's going to give you that kind of detail, but in a debit and credit format possibly, rather than a plus and minus type of format, but similar information. Then we have the journal. So if you had journal entries, you got a report, and those might have debits and credits in them. So if we had a journal entry transactions, we got the profit and loss comparison, profit and loss. Those are fairly standard. Recent automatic transactions. So if there are automatic transactions set up, then you have those, like you can have a time transaction that you say like to happen every once in a while, like a recurring adjusting journal entry. Recent transactions, reconciliation reports, reoccurring template lists, statement of cash flows, and the transaction detail by account, transaction list by date, and transaction list split, as well as the trial balance. The trial balance is what I was waiting to get down to. It's going to be a very useful report too, because let's just take a look at the trial balance. It's actually an easier report to look at if you just want to look at the account balances, even if you're not familiar with debits and credits. I'm going to change the dates from 01/01/20 to 12/31/20, and I'm going to run that report. Now, what it's doing here is it's just basically giving you a list of the accounts and the balances in it. It has them in debit and credit format, but even if you don't know debits and credits, I mean, if you go down here and you say the checking account has that much in it, right? It's a debit, whatever that means. It's it gives you the account balance. What it removes then, if I go back to the balance sheet and then I go back up top and I go back to the report, you can see the trial balance is basically in the same order. It's kind of like the chart of accounts plus the balances on it, but it removes the things like the asset, the category, and the bank account. All this added details removed. All you see are the actual accounts, checking account, savings account. If I go over to checking account, saving account, and so on and so forth. And so that's nice. When you get down here, you're going to say, oh, this is a credit. That's a liability. I don't know what a credit is. If you didn't know what a credit, whatever, right? I mean, that's a MasterCard. That's obviously the balance we owe on a credit card. So then if you go, so it's really a nice clean way to see the reports. Now it's just like the chart of accounts, the chart of accounts being in order, assets, liabilities, then equity, and then the income statement, profit and loss, balance sheet here being in order. You got the assets, then you got the liabilities, and then equity. So it's same order down here, but it's a lot faster to get through, right? You got the assets, and then the liabilities here, and then you got the equity. And then you've got basically the income accounts, which are revenue and expense accounts down below. So although we have the debits and credits here, we might include this as one of the major reports that we would put up top with the balance sheet and the income statement. It's not an exception to the rule that all other reports are basically detail about the balance sheet or the income statement. It's just that this report kind of strips down the balance sheet and income statement into one report without all the subtotals in it. And so that could be a useful tool.